That is going to form the basis of our discussion for today. We're basically speaking about the manufacturing sector. Now, Thika-based Capwell Industry Limited commissioned a 250 new beverage flour plant. Rajan Shah, Capwell CEO, said the new plant is a strategy by the company to expand its operation and introduce more products to the market. Joining me is the CEO of Capwell, Rajan Shah. Good afternoon.
Good afternoon, Sarah, and thank you for having us.
Thank you for joining us this afternoon. Now, if you can talk about your beverage plant, how many people is it going to employ, or has it employed directly?
Right, so this is an absolutely new plant, and it's actually a completely new product in this market. We are probably expecting to start off with employing about between 50 to 100 people directly, and then indirectly probably another 200 people. But more importantly is that this is a new innovation we are doing. It's a first of a kind in this market, and it's a new process. It took us 2 years of research and development, and that's how we kind of came up with this. And we hope that this is going to kind of be the starting point to grow in this kind of beverage sector.
All right. When you talk about the manufacturing sector, yes, first thing in mind is the Big Four agenda, the government support to propel this particular sector. Right. Do you think the government has done enough when it comes to propelling this sector?
Yes, as a starting point now, manufacturing is one of the Big Four pillars, so that actually in itself is telling us that the government is now taking manufacturing very seriously. This is where most of the jobs that the government wants to see created are going to come from. We need to improve our competitiveness as a country, as manufacturers, not only within the local market, but also for the export market. This is where we are liaising with government to ensure that the right policies are put in place so that we become globally competitive, so that we can be able to export our products as well, and as a result of that grow the manufacturing sector.
Okay, I'm glad you talked about competition.
Yes.
When you talk about competition, first thing is the African free continental trade. How do you think as Capwell can you take advantage of this particular free trade to ensure that you, as a brand, you're competitive enough, and at the same time you produce quality products?
Right. The African free trade is something which is definitely a good thing which is happening. We've already seen free trades in the East African region and then the COMESA. Now we are making our market bigger. 2 billion people is what we expect the market to be. So as manufacturers, we are excited because there's big new markets. It's how we take the opportunities of those markets by ensuring that we can export our products from here, as well as establish in all those other countries where opportunities lie. So as an initiative, I think and Kenya was the first one to ratify, and we are looking into that space to see how we can regionally grow our business.
Okay, and what are the challenges facing the manufacturing sector, and you think that can be addressed immediately for economic growth to actually prosper?
So manufacturers do not have a very big ask. All they require, is that we have a good infrastructure, we have the right stable policies, macroeconomic policies, stability in interest rates and exchange rates, and also ensuring that we have a system which is working internally, where there is a high velocity of circulation of money, so that we can be able to turn over our money and actually see that we are getting paid on time. So all this, and then of course there are other, if we look at agro-processing, which we are in, we want the right agricultural policies in place in the country so that we can be able to have a stability in supply of the grains and at stable prices, so that we can be able to then pass on the benefit to our consumer in terms of stable prices of a finished product.
Okay, and about the agriculture sector and stable prices, do you think we have enough maize in the country?
Well, if you look at the last few years, regionally we have been, except for 1 year in 2017 when we had to actually import from beyond the East African region, regionally we are reasonably self-sufficient. But there are years when there is also droughts in our neighboring countries. But as Kenya, we are not fully self-sufficient in our own maize consumption. There are various figures flowing around. 45 million is what we consume, between 34 to 35 is what we produce. So the deficit of 10 million is coming from the neighboring, which is Uganda, Tanzania.
Okay. And how can the government close that gap?
We need to kind of help our farmers, ensure that kind of the better agronomical services given to them. One of the things that we used to do in the past, which probably we need to kind of improve on, is farm extension services. If we can improve the agronomy services to our farmers, they can produce better yields on the produce, and as a result of that, they have more money in their pocket and be able to sell their produce at affordable prices, which would allow us to then further on sell to our consumer at reasonable prices of the finished product.
You mentioned stable prices. What prices can be set in the market to ensure that actually it's a win-win for both farmers and millers?
Sarah, it's not really about what is the particular price. What we have to look at is what is globally a best acceptable price. If you look globally, if you look at maize prices, they have been at a certain level. If we can peg ourselves and benchmark ourselves to be thereabout, then that would be the stability. Of course, globally prices do go up and down. As long as we are probably at par or close to what global prices are, then I think we are actually doing well.
Okay, and in terms of diversification, moving away from maize and actually tapping into these other products, do you think we're doing enough?
There's already a discussion which has started to move into other kind of cereals. We'll look at sorghum, millet. These are all other nutritious products. Our company also itself has already started producing many of this, using these grains of millet, sorghum. Pulses is one other area where we need to kind of improve on our own productivity within the country. But the discussion has started. We need to there's a lot needs to be done so that we just do not become over-dependent on maize. But over and above that, generally the consumer trend is also moving towards more consumption of wheat and rice as well. And we need to see how we can actually try and narrow the gap between our production and what our consumption is in those grains as well.
Okay. There was a bit of a challenge that, especially in the manufacturing sector, and many manufacturers came out complaining through Kenya Manufacturers Association, saying that the incentive, the rebate given for electricity at around 10 p.m. to midnight is not sufficient enough. Has it affected you in any way?
Okay, I mean, I can probably say, because I'm also one of the board members of Kenya Association of Manufacturers, I think maybe it's probably not come out as accurately that Kenya, of course, this was also driven by Kenya Association of Manufacturers. We wanted to ensure that we get lower, cheaper power so that we can then be able to be more competitive. It's still work in progress because there are various other conditions which have been put against that cheap power, and we have to make sure that our members are able to kind of be able to comply within some of those conditions. And ideally speaking, we want to see a permanent downward movement in electricity prices. That's what's going to, in the long run, benefit us and be more competitive.
All right, and probably if we can now come to Capwell, what are the future prospects for the company?
I'm very positive, Sarah. As a company, we are now 20 years old, but as a family, we have been in our hometown of Thika for over 108 years. We are very positive about investing, and we already have plans for the next 5 years to continuously invest. Of course, there are cycles of highs and lows in any economic cycle, but our investment plans go beyond that. This recent investment we have done in the beverage plant, and we just launched the Yola drink. It's one of those kinds, innovation, and we are investing a lot in research and development.
And how has the perception been, especially knowing that you have the hard economic times, the perception from the customers in receiving your products?
So it's actually tried to kind of come at the right time. During these hard economic times, we are coming up with a value proposition to our consumers. This is a very affordable kind of nutritious and energy drink. A 250 ml for 40 shillings, 450 ml for 60 shillings is going to retail. It's going to be like a meal on the go. So it's actually we're trying to, in this hard economic times, we are actually giving a value proposition to our consumers that they can still be able to afford and still get a nutritious product that they can consume.
And being in business for over 100, you've said 100?
Well, we have been in the country, I mean, as a family, we have been actually in Thika for over 100 years. As a business, Capwell Industries is celebrating its 20th anniversary this year.
20th anniversary.
Yes.
And for 20th anniversary, how has ease of doing business in the country been? In terms of even licenses, how has it been? Has it been easier, keeping in mind we have the Big Four agenda there, to support the manufacturing sector?
So if I look at the time horizon over the last 20 years, yes, the ease of doing business has actually improved. Of course, with devolution, we have also had a lot of challenges that we are still working, because there's also a lot of inter-county trade barriers. When you move from one county to another, you are actually being levied fees which are actually becoming an impediment to business and an increasing cost of doing business. But we are working with government to ensure that we can actually try and streamline some of those impediments to doing business. But overall, ease of doing business has improved. We are seeing more technology being used. We are actually seeing a lot more of digitization, and I think that's really all towards. And
what are the incentives that can be put in place to ensure that as a manufacturing sector as a whole, yes, it's able to spur economic growth, and at the end of the day it reaches its goal of employing as many people as possible?
Our incentives are very simple. Let business continue doing business without any impediments. Any unnecessary levies and taxes should actually be avoided, because that's again a cost to business. Ensuring that if government owes money to businesses, it's paid on time. That's all we are asking for, and that the business, if they are let to do their business, we will all thrive.
Okay, thank you very much. Rajan Shah, he is the CEO of Capwell Industries, and he's been able to tell us about the manufacturing sector and the challenges and